Hello traders, today is the 25th of December 2011 and happy Christmas to you all directly from London. The time is London is 54 minutes past 6 p.m. Okay, in New York that's what time is it? That's 13:54. That's 54 minutes past 1 p.m. in New York. Happy Christmas to you all, okay? Whether you are eating turkey or fish or any other excellent, delicious food, happy Christmas to you all. Bonne fête de Noël à tout le monde, okay? Schöne, okay? How do we say that in German? Okay. So it's a happy Christmas to you all, okay? So what am I doing here, okay? Today's Christmas. Why suddenly I sneak away from everybody to do a quick video to post on YouTube, okay? You understand clearly what's going on here. It's all about addiction. Addicted to post a video on YouTube, addicted to trend, addicted to a day trade, addicted for swing trading. Okay, now as everybody is digesting the first portion of Christmas, okay, I'm allowing myself to quickly, okay, say a happy Christmas to all my friends on YouTube. Okay, YouTube has given us the opportunity to make a lot of friends, and I have made a loads of friends on YouTube, and I'm very busy right now. Normally myself, in normal life, I don't make a lot of friends, but on YouTube, I make so many friends, hundreds of friends, and it has been a long time, okay? And I want to say to YouTube also, thank you to YouTube, and it has been, okay, a lovely year, 2011, okay? We see a lot of market distortion this year, a lot of market manipulation, talking about the Euro-USD currency pair. That manipulation has stopped because, as I explained to traders before, the divine nature of the market has taken over. After a distortion and manipulation, the market will rectify itself. So whether the market is manipulated, distorted, or whatever, at one point the divine nature of the market will take control, and the market will return to its fair value. It is same thing, blah 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 blah, and my blah 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 continue even on Christmas Day. Okay, now I want to talk about two patterns on Christmas days. Okay, we know about the double top pattern, double bottom patterns. Okay, we know about the inverted head and shoulder pattern. We know about the head and shoulder pattern. We know about the cup and handle pattern. Okay, we know about the round bottom pattern, and we know about the triple bottom pattern, all the other wages, all the blah 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 price patterns. Okay, but very often there are plenty of price pattern, false price pattern, and I told traders 100 times to stay away from the price pattern and to give priority to the market patterns. If you want to use any price pattern, you must align the price pattern with the market pattern, otherwise it's useless. If you see a bearish pattern, you must align the bearish pattern with, okay, the market pattern. If the market pattern is bullish, but you see, okay, if the market pattern is bearish, but you see a bullish price pattern, okay, you must stay away from it. Okay, you must stay away from it unless you are using area wave and you have spot the top of the market or whatever. Okay, this is just okay, few things you need to be aware of. So the reason why a lot of traders are losing, because they are using the price pattern a lot. The price pattern, double bottom, inverted head and shoulder. People buy or sell according to the price pattern without paying attention to the market pattern. We have also explained to traders this year the importance of the top-down trading method, okay, the higher time frame, the signal time frame, and the entry time frame. These are what we call the stable datum in the market. Our three main websites are www.stochasticmarket.com. That's the beginning of the whole trading, general trading, everything about trading. That's the stochasticmarket.com. As always, when traders start trading first, okay, they don't pay attention to the area wave and the Fibonacci. So you start from stochasticmargin.com and then you move to 24elliotwave.com. Because you are maturing as a trader, you must know about the Elliott wave. So there is a different step. So you move from stochasticmargin.com and then you now dwelling on, so to speak, dwelling on the 24elliotwave.com, which means you increase your curiosity to know about the Elliott wave. And then from there, you go to www.dayprotrader.com, a special website for Fibonacci. So it's just the purpose of it, 3 steps: stochasticmargin.com, 24elliotwave.com, dayprotrader.com. If you are trading and you don't know about Elliott wave and Fibonacci, you are losing, okay, a big time. Okay, 2 patterns. The first pattern I want to talk about is okay, addiction to day trading. So I don't want to talk about price pattern today. I don't want to talk about market pattern today. I want to talk about psychological pattern in the market. Okay, so the pattern that we see very often when you look at a trader, when you analyze the profile of a trader, you see very often, okay, consistently 2 patterns. The first one is the addiction to trading. Okay, so what's happening? Traders always want to be in a trade. So that's why I'm posting this video today, because you want to increase Christmas Day. George is posting a video. So George is addicted to trading. Yes. So you want to find a time to talk about trading, or to trend, or to do something with the market. Whether you are experienced trader or they go through it. So weekend, very often you see traders, they are talking with their women or their loved one, or they are happy, okay, in family mode. Suddenly they nick into the small room or the study room in front of their computer, checking a chart or drawing a trend line. And then maybe the wife or the husband pop in and say, "What are you doing?" Say, "Nothing, I'm just looking at something quickly. I'll be out very soon." And the 5 minutes will end up being an hour, because you are spending your time again setting up your goal for the next week. It's addiction to trading. Whether you do it for family, when you're supposed to, it's supposed to be with your wife, as I'm supposed to be, okay? I stay away from my family for this time I'm doing this video now, Christmas Day. You can see it. So it's an addiction. So traders are addicted to trading, especially those who are day trading. You see very often day traders, as soon as the market opens, okay, they place a trade. So they look on the 5-minute, 50-minute chart or 30-minute chart. Stochastic is overbought, boom, okay, place a trade to sell. Or stochastic is oversold. They check 50 minutes, stochastic oversold on 50 minutes, stochastic oversold on the hourly chart, stochastic oversold in 30-minute chart. It will definitely go up. They will place a trade to buy. Or stochastic is overbought, 50-minute, 30-minute, 4-hour chart, they quickly place order to sell. And by the first hour, they lost, because the price did not obey the stochastic, but the price did something else. And they failed to analyze the price or to understand the message that the price was communicating. It happened very often. Okay, and I designed a tool for which I like to call, okay, the master key for day trading. It's a full play trading system, very simple trading system. And it was a situation where on the 4-hour chart you see very often the stochastic is overbought, but the price will go up. Or on the 4-hour chart you see the stochastic being oversold and the price will go down. And it's a full it's like a joke in this market. So the pattern we want to control is the addiction to trading. Okay, you don't want to be addicted to trading. If you cannot stay like 3 days without trading, you are addicted to trading. Okay, if you have never done it, try to do it. Okay, so one particular week, decide that I don't want to trade for 3 days. If you fail to obey that, which means you're not going to open a trade, or you don't want to, you won't log also into your trading account. Can you do that for 3 days? If you can't, then you are addicted to trading. Don't worry about it. It's normal for traders to be addicted to trading. I was addicted to trading, but now I work on it. I can stay now. I can tell you I've done it myself for 3 days without logging onto my trading account and without doing anything. Okay, so you need to control it. It's not that you are trying to stay away from trading, but you want to control. Okay, you know, to control something, you should be able to start it and to stop it also. So you start your car, boom, 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 it starts moving, and you can't stop. If you can't stop, you can't control it. You have to be able to brake, to stop, to slow down. So it's part of the training. You should be able to go fast which means you trade, and you should be able to slow down, you should be able to stop, you should be able to stay away from trading. Some traders over trading is the one that is destroying their trading account. You see here, in this section here, I will highlight it for you. A lot of traders will lose money when the price is consolidating, the price going up and down, up and down. So what usually take place, especially for day traders on their 50 minutes or 10 minutes or 5 minutes, so the guy will come in here, they see the price going up here, okay, they say, okay, it's going up, they buy here, okay, so they buy there, and the price quickly will retrace back down. By that time the price reaches this level, so they say, okay, now it's going down, so now they will sell here, and the price will go back up, and they will say, okay, for the last time I'm going to buy again. They talk to themselves, they say, for the last time I'm going to buy again, this thing is going up anyway, so I'll buy here and I'll place my stop loss below this level here, okay, and the price stagger here like this, okay, stagger here like this, but at the end the price come back down again. And during the consolidation period, the addicted traders lose a lot of money, especially those who are day trading, as the price is also oscillating between two levels, because they have failed to pay attention to the market pattern itself, trend, post trend. The price does not always trend. So if you are taking a signal, sometimes the price will move a bit and then change direction. You know that you are dealing with consolidation pattern. Especially for those who are trading robot or trading system, you have to understand the market pattern. This is very, very important. Now, very often also, traders will look at a pattern, a price pattern, and they will place a trade. Now, when do you enter the trade? Okay, when do you enter the trade? You enter the trade after you receive a value signal. It's just simple. So I mean, if anyone purchases any of our trading system, all I say to them, take the signal. You want to take a bullish signal, you take it at a support level. When there is a value and support level, that's it. If there is no signal, you can't enter the trade. Now you have to understand your signal and know when to trade them. You see the trend line here? After these 2 points here, I have my primary trend line. If I want to buy, I would prefer to buy near the blue line here. But if the momentum is increasing fast, they probably give you another trend line. You see here, this is another trend line here, because the momentum is increasing, so I draw it also. Here, it pulled back near this level, that would be a better place to buy. Now there was a consolidation here, before the price was touching my primary trend line here. But finally, we must expect the price to break above the consolidation session. That's how we will buy at a resistance level. If you see a consolidation or a resistance level you want to buy, the price must break above the consolidation level and retest it right here. Break above it, retest it, okay, and turn around. This consolidation session, that's why a lot of people losing money. Because the consolidation period is an indecision period and a high volume session, it usually takes place at a support resistance level. The price can go down or go up. You want to buy, you want to see the first area wave, the second area wave, not cancelling the first wave, and the bullish momentum to resume. The same blah blah blah. Same thing, you want to buy at a support at a resistance level. You want the price to break that resistance level bullishly, strongly bullishly, and to retest the resistance level, and then the bullish momentum to continue, and then you receive a signal to buy at least before you enter the trade. You will use the higher time frame to verify whether it's a valid support or resistance level, and then use an entry time frame. It's the same thing all the time. Here again, price move fast, price slow down. That's not always trend. And the traders, they have a valid trading tool, but they can't trade it because they don't pay attention to all we are talking about all the time. Some traders are improving, and some traders, we know that they will get there, because we see they want to do well. First, you must be willing to do well. If you are not willing to do well, you don't have even the goal to do well, so you're not going to do it. The goal is very important. Some traders make the right goal, which means I want to improve my ability to trade, I want to trade like a professional trader. It's excellent goal, and you start working on it gradually. Now, that's the first pattern, talking about addiction. Okay, the second pattern is the reward risk ratio. I don't want to talk about a risk reward ratio. I always talk about reward risk ratio, 2 to 1. You want to get £200 for £100 risk. You want to take £100 profit for £50, okay, risk. But when you are day trading, sometimes you will violate that rule. You will use, okay, 1-to-1 risk because you are day trading. You don't have the whole day. Some trade, you risk, okay, 30 pips, and you will take 30 pips. At least you do not lose. But the addition, the second addition, talking about the reward risk ratio, is that many traders do not check the risk reward ratio. They will constantly violate the risk reward ratio. So they want to enter a trade, or they want to sell or buy, they will not pay attention to the reward risk ratio. They will just place the trade, or they will just take the signal. The signal is one thing, but you are the decision maker. Always, when I write a trading system, I will put a list of the tool that trader must use, but sometimes I will put at the bottom, you are the last tool, because you are involved in all trading decisions. So on this Christmas Day, I want to draw your attention to the two addictions. The first one, okay, is the addiction to trading. The second one is the reward risk ratio, and how traders are neglecting, okay, the reward risk ratio. I hope you find this video useful, that you will try to control these two addictions. The first one talking about okay, the addiction to trading and also the risk reward ratio. Now, as of from today and the beginning of the new year, you will start paying attention to the reward risk ratio. So you receive a signal to buy here at a value support level, and the signal is aligned with the market pattern. You will check the risk reward ratio. The first target is always, if you buy, is the first and nearest resistance level. So you want to see, all right, before this the music will change, I will get this X amount of profit. Is it worthy entering the trade? You also check the time you are entering the trade. What time is it? What is the market psychology during that time? Okay, very important. And as always, I leave it to traders to make the right decision and to develop their own trading style. It will take time, but those who are serious traders will get it by all means. Because where there is a will, there is a way. We wish you a very happy Christmas, and until the next time, enjoy yourself and be very happy.